Hi, this is tax attorney Parag Patel. Today I wanted to discuss the IRS's 2019 Dirty Dozen list of tax scams for 2019. It was published last month and it has a dozen different areas of dirty dozen tax schemes. There's 12 of them, of course. Things such as identity theft, tax return, preparer fraud. But today I want to specifically talk about the offshore tax avoidance. And the successful enforcement actions against offshore cheating shows that it's a bad bet to hide money. Income offshore. People involved in offshore tax avoidance are best served by coming in voluntarily and getting caught up in their tax filing responsibilities. The IRS published a notice talking about this specifically. And basically, the IRS said that this made tax avoidance remains a primary focus of the IRS overall enforcement efforts, and criminal enforcement teams closely working with the Justice Department are ensuring that the tax laws are being followed. Specifically, the IRS highlighting hiding income offshore. Over the years, numerous individuals have been identified as evading U.S. taxes by attempting to hide income offshore, banks, brokerage accounts, nominee entities. Then they use these funds using debit cards, credit cards, wire transfers. Others use foreign trusts, private annuities, insurance plans for the same purpose. The IRS is using information gained from investigations to pursue taxpayers with these undeclared accounts, such as bankers and suspected of helping clients hide their assets overseas. Now, while there are legitimate reasons for maintaining financial accounts abroad, there are reporting requirements that need to be fulfilled. U.S. taxpayers who maintain such accounts who do not comply with the reporting requirements are breaking the law and risk significant fines as well as the possibility of criminal prosecution. The IRS reminds taxpayers who fail to properly report their foreign investments to pay tax on these investments and to come forward. Since there are many different circumstances, the IRS offers several options for addressing noncompliance. And the IRS is also talking about third-party reporting under FATCA, the Foreign Account Tax Compliance Act. The U.S. government automatically gets third-party account reports from foreign banks. So the IRS receives more information regarding potential noncompliance by U.S. persons because of the Swiss bank program as well as through FATCA. And as a result of that, this information makes it less likely that offshore financial accounts will go unnoticed by the IRS. These are just great warnings made by the IRS. They do this every year. In fact, offshore non-compliance and hiding income offshore and assets has been on the IRS's Dirty Dozen list for probably the past several years. The IRS reminds us all penalties for failure to report foreign offshore transactions can be severe. A summary of these potential penalties as well as comparison of what must be reported on Form 8938 and FBAR can be found on the IRS website. There are several programs that are available by the IRS that the IRS offers this link to. I'm going to do a quick click through here. There are four of them specifically. One of the first one, which they mentioned, is now closed. It's the Offshore Voluntary Disclosure Program. The second is the Streamlined Filing Compliance Procedure Program. There's two parts of that program: the Streamlined Domestic Offshore Procedure Program and the Streamlined Foreign Offshore Procedure Program for non-residents of the United States. These are both very good programs with a 5% penalty with the domestic program, 0% penalty for the foreign program, which are excellent. Over the years, we've helped dozens and dozens of clients, probably over 100 clients with these programs. And of course, there's number three is delinquent FBAR submission procedure. That's for people who have fully reported all their income and are not eligible for these other two programs, but they feel the need that they can go through this program. And the last is the Delinquent International Information Return Submission Procedure Program. These are all four programs. Only three of them are available, but they're very good programs that taxpayers are encouraged to explore with their advisors in determining what their option is both the best one for them. So I'd strongly recommend people look into these programs. They're excellent programs. We've done a lot of this type of work over the years, and they offer a lot of great opportunity and promise without a high risk of audit in our experience to consider for non-compliant taxpayers. So that's it for today. We wanted to provide a good overview of these programs. Thank you for watching. Have a good day.